There's an old adage, if you fail to plan, you better plan to fail. I'm sitting down with Gary. We're going to talk about a mortgage plan, and we're going to get started right now. How we doing, Gary?
Doing great. How's it going, Clark?
Good, good. We are here today in this episode of Pure Perspectives to talk about a mortgage plan, why it's important to have a mortgage plan, what's included in it, and just factors you should be thinking about if you are looking at either going out to purchase, even if you're looking at a refinance. Some of these tips are going to help you just be more dialed in and more focused on your specific need and how to best prepare. So I guess, Gary, as we get started, I guess at a high level, why is it important for people to have a mortgage plan?
Well, I think just plain and simple, it's such a major part of your overall financial outlook, right? Like, so as far as how much of your general income, gross income is going towards your mortgage is by far the biggest, in most cases, the biggest cost every month to your household. So, having a good understanding of what that looks like on the front end is super important. How much can you afford? Is your income in a place where you're going to go, it's going to increase drastically over the next couple of years? Or are you in a fixed income type situation? Maybe you're in retirement mode and you're on a disbursement off of your retirement every month. So you know what that is, and you know how much you don't want to dig into that versus, the alternatives. So it's super important, and it makes the loan process and the home shopping process so much easier.
Yeah, 100%. I would say, for the customers that we work with that come in somewhat prepared, things just go a lot smoother, right? They know, they reviewed it, they know what to expect. They have some idea of a realistic budget. That's not always going to be guaranteed. It's our job to kind of help you figure that out based on your debt and your income and how all those numbers work. But also factoring in things like down payment. How much cash do you have available to put towards the down payment? And if it's not enough, what loan products are out there to service you? So I think, number one is, what can I afford? It's the big question we get. I think not just first-time home buyers. I think anybody that's been out of the market for a while, or maybe is retired and no longer has, an income. Like, it's now a, what can I afford? So it sounds like that's number one on the list. What can I afford? Is that a fair assessment?
What can I afford? What do you have saved up? And what do you need to save up if you're not where you want to be? Right. And then I think you alluded to it as well, is what loan types, what products do you need to get to that point? And so in most cases, probably 75% of the people we work with are going to fall under what we would consider a conventional FHA, VA type situation. Pretty straightforward. We use your W-2 income. We use your self-employed, your tax returns. But then there's this segment that we work with, about 25%, which is a non-QM loan. So we always start out, let's just take, for example, I've got a self-employed borrower right now, just disclosed yesterday. And we started the process. He came in a couple weeks ago. He wasn't in a huge rush. We're doing a refi. And he said, look, this is my situation. This is what I'm trying to accomplish. Doesn't owe a lot on the property. Has some things he wants to do and get some cash out of it. And so we just sat down and looked at all the information. We got their credit, figured out where their credit score was, seeing what kind of debts that they had. They were going to pay off a little bit of debt, but primarily having that cash on hand to do some extra projects around the property. But we start, I always told him, I said, let's just send me your tax returns. Let's start there. And evaluate that. And, he brings them in. Natalie reviews it from our team. She's our loan partner, does an amazing job. In about 30 minutes, we know exactly if we're going to make it on tax returns, or we need to go down what we call the non-qualified mortgage or non-QM route. And that's where we use bank statements to qualify the borrower. And that's super important. So and that can take a little bit of time, a couple of days. Like I said, with this specific client, we weren't in a huge rush. he was more concerned with getting everything lined up going forward than it was, hey, let's slam this through as fast as we can. And, it puts a lot of stress on not only the client, but on our team as well, to make sure that, if anything comes up, we've got time to fix it and stuff like that. But yeah, loan type's super important. Understanding what product is going to fit your situation, whether it, like I said, it's typically in a self-employed sense, you got to have a plan. And so, I'll even dig a little bit deeper on that. If you're self-employed and you're thinking about something down the road, and this always comes up when the self-employed borrower comes to me, I ask them for their tax returns, right?
Mm-hmm.
And we say, okay, how much did you pay in taxes, or how much did you tell the government you actually earned? That's usually where it goes off the rails, because their CPA has been telling them, hey, look, we are going to take advantage of all the tax codes and bring our taxable number down, right? So in that case, you might have, hundreds of thousands of dollars in revenue, but not as far as income, because you're telling the government, saying, hey, look, I've got these, I can depreciate stuff. I can write off a lot of stuff, which, none of this is illegal or not above board. But that's what I always say. When you talk to your CPA, you're having a great conversation where you don't pay taxes, right? You're doing the right things. And then you have your situation where you come to us and we need you to pay taxes if you want a conventional loan. Right. So
yeah. So
super important.
Number one, what can you afford? I think what Gary mentioned is we do a deep dive in understanding what your income is. It isn't just us doing a pass over your pay stubs, and we do a deep dive to understand what you can afford. And then from there, we look at the mortgage products. What products are available in the market? We are a broker, so we have a number of lenders we can go to. Those lenders all have different types of products, different flavors. It's flavor of the week. It's our job to make sure we're identifying the right product to match your income and purchase needs and what have you. So that's 1 and 2. Number 3, what would number 3 be on the list, Gary?
So maybe not in this specific order. I would probably put credit probably above loan type and mortgage product, because that will dictate where you're going to fall as far as products concerned. So understanding your credit is super important. We've talked about it in previous posts, and if you haven't done it, make sure you hit the subscribe button and get notifications, because you'll get notified of all these videos. And we do have, and our goal is to provide 1 to 3 good solid pieces of content where it's not going to take up a ton of time, 8 to 15 minutes, where you're going to get some good things to take away, including this mortgage plan, which you can find on our website on our loan resources tab at mypurefunding.com. But credit's super important, because it dictates, one of the pieces that dictates the cost of your loan, right? So if you got a lower loan or lower credit score, your rate costs, your rate might not be necessarily too much higher, but the cost to get that rate could be higher, right? So it's super important. Understand where your credit is. And then when we pull your credit, that's when we see all your liabilities. So if you've got student debts, if you have credit cards, personal loans, vehicle payments, whatever that's all going to come up on the credit report. So we'll have a good picture of, if you're in the purchase mode, hey, where do I fall DTI? Do I need to pay some stuff off? Or in a cash out refinance situation, we just do that at closing. And that goes for both, just purchase or refi, cash out refi. But it's the credit in the previous videos we've done before, we talked about where we do have the credit repair product that will allow consumers. We've got a quick, if you're in process, we can submit it to the credit team. This takes about 5 days, 7 days max. But if we're doing it on a pre-approval, we can still ask and request a credit upgrade. And sometimes, we can get, as little as 5 or 10 points. We can get as many, we've seen, as up to 60 points on an increase on your credit score. And that's real dollars in your pocket. in terms of cost, and then two, in terms of qualifying. So whether if it's an FHA loan, and you're at, a lower credit score and you get up above that 620, or, you're at a 620 and you need to be to 660 on a bank statement loan, or a 680. That's all real. That impacts you immediately. And we see it every week. We do it all the time.
Yeah.
So it's super important. Yeah.
Yeah, and I would say that, when this is part of the process. So your number that comes back on our initial poll, like, we can work with you to improve that, figure out what is outstanding. It's not, it's not the final number. It's not carved in stone. We can work with our lenders and our credit team to try and improve that, and also look at, like, is it worth improving? Like, if we were to get it up 10 points, what does that do for cost and rate? Is it worth the effort, or does it even matter? All right, good one. What would you have next on the list?
So I think you need to understand what goes into a mortgage. A lot of people focus on rate, which is super important, but the rate only drives a portion of this, right? So your principal, your interest, your taxes, and insurance. Those are the four components. And then in cases that, PMI is required, like on an FHA loan, or somebody that only put like 5 or 10% on a conventional, that would be the fifth component. But understanding our area is kind of unique because the taxes can differ greatly from county to county. So you can be in Weatherford and then have a house that looks and feels a lot like something in, let's say Erath County, but your tax burden might be, half. Yeah. And so if you're looking at properties, I always tell everybody, just try to either work with your realtor or look at Zillow or go to the county website and try to get an idea on, what taxes could be, because there is a huge sticker shock right now, because traditionally we've been used to seeing low taxes across the board, but property taxes here in Texas have gone up quite a bit in the last, call it 2 to 3 years. And so if you're looking at one property that looks very similar, they're not as similar on paper as they are on Zillow, right? Yeah. And so you might be on a $4,000 a year annual tax burden versus a $8,000 or a $7,500, and that makes a big difference. And then the same goes for insurance, right? It's important, and that's a moving target. I know in California, you guys have a lot of struggles with insurance. We could probably have a whole nother conversation around insurance, but taxes and insurance go into that final number, your monthly payment. So it's not just your rate that's driving a number, it's your rate with taxes and insurance. So it's important to understand how that all impacts your monthly commitment, right, to that house. So I think, as far as, just understanding that part of it, you could be in a situation where you have an HOA. You could be in a different situation where you got additional taxes that come out, whether you're in a PUD or whatever the case may be across the country. There's different designations for that, but you really want to understand the area you're looking and what the impacts are to your monthly number. And taxes and insurance are hands down two of the biggest drivers right now.
Yeah. And we talked about the term PITI, principal, interest, taxes, and insurance. We did a video on, all the acronyms that it was a first tranche of acronyms, and that is one, right? You need to understand principal and interest. Obviously, we're going to be able to determine that. Taxes and insurance, per Gary's point, especially here in California, you can't just throw a number in there. We need to speak with somebody and try and get an idea of where that house, like my house sitting here, is going to be much different than a mile away. So try and get a real understanding of what that policy is going to cost, because that does change your payment. It does change a lot of things. So very valuable, valuable information. What's next?
I think just kind of, in the future, understanding what your current situation is, whether you're refinancing or purchasing, having the, the forethought, because right now we all have to kind of plan around what rates are today.
Yep.
So the hope is rates will come down at some point in the future. I mean, I really don't see, there's not a lot of economic indicators that are going to say, hey, we're going to be in the, high fours anytime soon.
Yeah.
But you need to be in a place where if you're in a loan that you're comfortable for a longer period of time, and if you decide to buy points, can you exhaust that cost over a period of time, whether it's 12 months, 20 months, 25 months, before you refi? Because the last thing you want to do is, pay $5,000 to get an interest rate that you think is better, but yet you turn around and refi in 8 months. You really just threw all that money out the window. So that part is super important to understand. And as far as your planning is concerned,
yeah, Willis and I did a video on refi and talking about when it makes sense, right? If it's going to cost you $5,000 to refi your mortgage and you're saving $500 a month, you can understand the break even point. So yeah, it does factor in on where you are today.
Yeah.
Ideally where you'd like to be. We don't have a lot of control over that, but we should talk about it, like when it's going to make sense to do a refinance, and that's all part of the mortgage plan that's ongoing post purchase. And as Gary mentioned, our mortgage plan is on our website. We'll put a link to it in the description here. Any other pieces of the plan that you think we should call out here, Gary?
Yeah, I think once you have the base understanding, right? Like, this is made to get some thought process going around whether you're in a refi mode or a purchase mode, to get you thinking about a few things. And then on top of that, we've got tools that we have on the website as well that are within the mortgage plan that are going to help you identify your home wealth. We've talked about it before, the home IQ reports. That's a report that you're going to get when you sign up for that. You're going to get that monthly. That's going to give you a ton of data. It's going to give you what your value is. It's going to tell you, hey, you know what? If you do want to move in the future, this might be a good property to rent, depending on your situation, if that's what you're wanting to do, and retain that property. So there's just a lot of things you can do. We partner up with real estate agents on this as well, and so that the team is all kind of wrapped together. So if you are thinking about it, then your agents there, we can talk about the value, we can talk about net proceeds, we can, that's where we would come in to talk about, hey, here's what down payment looks like versus these net proceeds. This is how much you'll put in your pocket. So I think that's important. In the beginning, I always tell everybody to go to optoutprescreen.com. Okay. And what that is, it's a great site. It's kind of like the do not call list, right? But what that is when the credit bureaus pull your credit, they own that data and they have the ability to sell that data. Now, there is legislature on the Senate floor as we speak. It's been there. There's been multiple bills over the last 3 or 4 years we've followed, and unfortunately, none of them gotten off the ground. So this is super important, because I can assure you, we never sell your information ever. But when that credit pull happens, your information is sold in the term of a trigger lead. And what all that it is
literally
instantly.
Yeah.
Yes. And so within 24 hours, your phone will begin to melt, because there's companies all over the country that are going to drop that information straight into their dialers, and they're dialing for dollars.
Yep.
So it's just a good way to protect your credit, or your personal information and privacy, insanity, right?
Yeah.
And then the other thing is to, if you don't, if you're kind of in the planning phases or throughout the year, you ever want to check your credit scores, go to annualcreditreport.com. That's a free deal that comes right from the CFPB. And so, you can, or not from the CFPB, but from annualcreditreport.com. But the CFPB, to kind of add validity, the CFPB actually promotes this site as the place to go get. So
those resources are also on the mortgage plan on our website. We'll put in there so you can go in there, the opt-out screen, opt-out pre-screen that Gary mentioned. It takes 5 business days. I would say give yourself time to make sure it takes hold, because you will, without it, your phone will melt once credit is run. And the home wealth report, I think, is a no-brainer. Whether you're thinking about buying now or in a year, it's just a regular reminder of what's going on with your property. And if you wanted to take action, what are those costs? What are the costs associated with it? So reach out to your loan officer. They can get that set up for you. Easy. It's a free report. Take it. And like Gary said, we partner with agents on that as well to ensure that you have a team that's there to help you with the planning stages. Anything else, Gary, we should touch on before we wrap up?
No, I think, like I said, the biggest thing is to get started.
Yeah.
And that's where we're here to kind of fill in the gaps, right? Like this stuff on the mortgage plan just kind of gives you 4 or 5 bullet points to start thinking about. And then once you start moving down the path, whether you're in a refinance mode or considering a refinance or an investment property or purchasing your next primary home, that's where we start filling in the gaps and start doing some of that heavy lifting on and understanding truly how much you can afford, keep you in your budget. You know, if we need to work on your credit, let's work on your credit. You know, those are the pieces that if you do that 90 days out versus, you know, like the day of, hey, I found a place, and we get that all the time, which is fine, but it's just a lot easier when, you know, we've got time to kind of put a plan together. So
yeah, and I would say, you know, here in California, get ahead of it, right? You don't want to go find your dream house and you know, clock's ticking. It's very competitive. So the more we can be prepared and have things lined up. Obviously, we work closely with your realtor and on the buy and sell side as well. We strongly believe in that level of communication. But the sooner we can get a lot of this information ironed out, the better you are to enter the market and find that dream home and feel comfortable, like, hey, we're putting an offer and we're going to give it the best shot. So, Gary, as always, thanks so much for taking the time. We will make sure you guys all have access to this, access to the home wealth report, opt-out screen, annual credit report. And a reminder, give us a subscribe, give us a thumbs up, hit that bell for a reminder for upcoming videos. You'll see snippets of this floating around the socials. We'd love for your engagement there. We'd love to have the discussion. This is probably something we're going to move into a live session at some point and have people come on and fire questions at us, because I think it's going to spark a lot of conversation.
I agree.
All right. Well, that's it. Get to planning. We got the tools. Get out there. We'll make sure you have all the information. And if you have any questions, reach out to your loan officer. Leave us a message on this video in the comments section. We'll get back to you ASAP. Gary, thanks again as always. We look forward to seeing everybody on our next episode of Pure Perspectives. Get out there and get shopping. Have a great day, everybody.